Hello students, now we will learn about the golden rule of accounts. As earlier we have learned that there are types of classification of account: personal account, real account, nominal account. Personal account are of three types. One is natural person account, another is legal person account, and third is a representative account. And natural person accounts, example Ashok account, Shweta account, Samir account, etc. Legal person accounts, company names, Shah and Company, Lehman Brothers and Company account, revenue sports club account. Representative personal accounts, outstanding expenses, prepaid insurance, or sundry debtors or creditors. In the other two, real and nominal accounts, real accounts are related with the asset, and in the asset there are two types: tangible and intangible real account. So tangible are those which can be touched, feel, example cash, furniture, building account. Intangible are goodwill, patents, trademark account. Nominal accounts are accounts relating with the business expense, losses, gain, income. Expenses and losses: rent, salary, rent account, salary account. And income gain is commission received, discount received, etc. Now there are rule of the particular account which is known as a golden rule, so we will learn about the same. Rules for generalized golden rules of accountancy. In a traditional approach, personal account relates to a person with whom business keeps dealing. A person may be a natural or legal person if a person receiving anything from the business. If a person receiving anything from the business is called receiver, and his account is debited in the books of the business. If person gives anything to the business, he is called a giver, and his account is to be credited in the books of the account of the business. Okay, so the rule is debit the receiver of the benefit and credit the giver to of the benefit. If person receive anything, okay, so debit the receiver. If person give anything to the business, credit the giver. Example: goods worth rupees 1000 sold to Ramesh. So goods worth rupees 1000 sold to Ramesh. So Ramesh is a personal account. Okay. In this transaction, Ramesh is the receiver. Ramesh is the receiver of goods. He is called receiver, and his account is to be debited in the books of the business. So here Ramesh is the receiver of the goods. So the account is to be debited in the books of the business. So debit the receiver, we will say to Ramesh. Ramesh account, debit the receiver. Okay. One more example: purchase goods worth rupees 500 from Kiran. From Kiran. So personal account name is Kiran. So in this transaction, Kiran is the giver. Now Kiran is the giver. So Kiran is the giver of the goods to the business. If he is giver and his account is to be credited in the books of the business, so here Kiran will be credit the giver, known as a credit the giver. One more example: paid cash 500 to Sanjay. Another example is Sanjay account. Now cash is paid from a business to the person known as a Sanjay. So Sanjay account, debit the receiver. So in this transaction, Sanjay is the receiver and Sanjay account is to be debited. So we will mention debit the receiver. Okay. Now another type, real account. As real is the property which may be either comes into the business or go from the business. If any property or goods comes into the business, account of that property or goods is to be debited in the books of the business. I am repeating, if any property or goods comes to into the business, an account of that property or goods is to be debited into the books of the business. So debit what comes in, we can say. If business is receiving cash, so cash account debit what comes in. If cash is going from the business, credit what goes out. If any property or goods goes out from the business, account of that property or goods is to be credited in the books of the business. The principal real account states that debit what comes in, credit what goes out. Example, goods sold on cash for rupees 1500. In this transaction, cash and asset comes into the business sale of goods. Therefore, cash account is to be debited in the books of the business. Cash account debit what comes in. On the other hand, goods and asset of the business goes out. The goods is going from the business, so of the on the sale. Therefore, goods account is to be credited in the books of the business. Okay, so in simple, whatever asset or goods come into the business, we will say debit what comes in, and goes from the business, we will say credit what goes out. As early the personal account rule was, any person receive from the business, debit the receiver, give to the business, credit the giver. Okay, now third, nominal account. Nominal account is an account that relates to business expense, loss, income and gain. If business incur expense to manage and run business, account of that expense is to be debited in the books of business. When a business earn in income and rendering service, hiring business assets, and account of that income is to be credited in the books of the business. In transaction of sale or purchase of goods or asset, if any loss is incurred by the business, account of that loss is to be debited, and if in the transaction of sale of goods or asset any profit is earned by the business, that then account of that profit is to be credited in the books of the business. So whatever expense incurred or loss occurred to the business, the account of particular will be debited. So debit all expenses or losses, credit all income and gain. For example, if from business the salary is paid to the particular person, okay, so that amount will be debited from the business as an expense. Example, paid rupees 50 as a commission to our agent. So here commission is being paid, so commission is an expense for the business, the commission account debit we will mention. If receive 500 and interest on a fixed deposit on a FD, if receiving the particular interest, then it is an income for the business, so that entry interest account will be credited as it is an income for the business. Okay, now we will classify the particular account. From the following transaction, find out two aspects, two accounts, classify the account and fill the following table. Now example is given, started business with cash rupees 50,000. So business has been started with cash. So in a business, cash is coming, so cash comes in. So aspect 1, cash comes in. Okay, so the person who start the business is known as a proprietor. So proprietor is the giver. Personal account rules come, proprietor is the giver. Second aspect is proprietor. Proprietor is the giver. First, cash comes in, so real account rule, cash comes in. Second aspect, proprietor is the giver, so proprietor is the giver will be mentioned. Number 2, purchase machinery on credit from Avinash rupees 20,000. As here we can see, one account is machinery account, as machine is purchased on credit from Avinash. Now Avinash account is that personal account, Avinash machinery is a asset, so real account. Two accounts, so two rule will be there. Purchase machinery on credit from Avinash 20,000. The machine comes to the business So machinery comes in one aspect, and giver is the Avinash. So Avinash is giver. Avinash is giver. Number 3, purchase goods 5,000 from Rahul on cash. So here two aspects are there. One is purchase goods 5,000. Okay, so after paying 5,000 to Rahul, the goods has been purchased. So purchase for the purchase expense has been incurred. So purchase is an expense. Purchase is an expense. And for the same, cash goes out. So we will mention cash goes out. Okay. Another example, purchase goods, that number 4, sold goods to Aniket rupees 6,000 on credit. Now sale of goods is here. One account is sell account and another is Aniket personal account. Okay, so sell goods to Aniket 6,000 on credit. So Aniket is the receiver, so we will mention Aniket is the receiver. Debit the receiver as a rule of personal account. And sales is an income for a business, so sale is an income. Sales is an income, nominal account rule. Okay. Number 5th, paid salary rupees 1,000. So salary is an expense for the business. Nominal account rule will be there. Salary is an expense. Salary is an expense. And for the same, cash has goes out. So cash goes out. Number 6, sold old table for rupees 3,000. So sold old table for 3,000. Cash comes in. So cash comes in rupees 3,000. Cash account debit. Debit what comes in. So cash comes in, and to second aspect is furniture goes out. As a table, it is in furniture. Furniture goes out. Now in another lecture we will learn about the two aspect plus two accounts and classify the accounts as well. Okay, thank you.